Yeah, hello and welcome to another update video about ADA. There isn't really much to add to the last video. We, however, are coming down quite strongly. It looks to me that the move down isn't entirely finished yet. For now, we can keep the current wave count up, but it seems like it's gonna get invalidated. We might actually make a new low to test down here the 34.5 cent support area. Yeah, remember we discussed here this 34.5 cent area, and yeah, we just in this move down, this is not entirely healthy anymore. This does not really look like an A-B structure anymore with a C wave to the upside coming. But you know, that's what I warned you about in the last few days, because it came down too low anyway. Yeah, it retested that 88.7% fib level. That's why I highlighted this support area in orange, just to highlight the risk here. Can of course work out, and as I said to you, the 34.5 cent area is strong support, so maybe we just see a bounce from there if we test it again, and then eventually come down. But my view is, and that's what I would like to see, that eventually, I mean, whatever happens here, also here you have a bit of a range between 41, 42 and 34.5 cents, yeah, where we bounce around. Yeah, maybe this can carry on for a little while. But this might even become a head and shoulders pattern up here. Yeah, if you see that, left shoulder, the head, and then we might put a right shoulder in and then come down into the support area eventually before we rally. This is still the area that I would like the ADA price to go. Of course, it's not an absolute must. Yeah, you can get a wave 2. That's why I highlighted it here in an alternative scenario that reaches only the 38.2% fib level. And you see that here by adding the 38.2 fib level to our support area. You see that this was the 34.5 cent level, and it reached that. Yeah, it touched that already, and therefore I've got this as an alternative wave 2. But what would that mean? That would mean that the move up here would have to be a wave 1, okay, and that we came down in a wave 2 and would now rally in a third wave of the next wave and so on. However, it has just pulled back too deep to be a reliable 1-2 setup. So therefore, I'm not really looking. I mean, I've got it sketched out here as a 1, 2, 3, 4, 5 as a possibility, but only related to the alternative here. So it's really just the alternative, and I wouldn't give it too much of, you know, not too much probability. The reason just is that we have just pulled back a little bit too much in this move down. Yeah, it's just not very likely anymore. Yeah, and 1-2 setup to work out, I wanted to hold above the 78.6 fib level and not break it all the time, and it has broken it here several times. Yeah, this would have been 36.14 cents, and we've broken it here, and just now again. Yeah, it's just too choppy. Okay, I would love it to turn around, at least temporarily, don't get me wrong, but it doesn't. It just doesn't. I don't have much confidence, and it appears to me we might need one more low here. We'll see. But therefore I've highlighted it with higher risk anyway, because it was highlighted here in orange. I've just made that box a bit smaller, so it's not in the way all the time. It's still possible, certainly, to go up from here before we come down, and therefore we need to be watching for any upside impulses. In fact, I'm actually counting it like that, because as long as we're holding that weekend low, we can give it a benefit of the doubt, but note that it's not high probability. I wouldn't be surprised if it in the end comes down. The only reason I'm counting it as a beginning of an uptrend, temporarily at least, to the 42 cent area, which would be an ideal target for that C wave before we come down. Okay, I did explain that in the previous video. 1 second. That this here could have just been A, B, C in a larger B wave, yeah, before we come down here, or that we go down straight away, of course, you know, but then we have to break the 34.5 cent level. But eventually I would expect it to get into this green area, because for a wave 2 to just touch the 38.2 fib level, I would see it a little bit weak. It's of course not invalid, but it's a bit weak. It's all probabilities, you know. But yeah, the only reason I'm counting the upside here is that we've obviously come down on Saturday, reacted actually fairly strongly, not really impulsively, but for now we're holding that low. Okay, and because we have enough waves on the downside to count this corrective move that came off the highs of 42 cents is complete. So we have enough waves. So, but until they are violated, I'm going to count upside here, but highlight the risk, of course. Okay. And if we see a break above the B wave high here at 37 cents, then we can be more confident about upside. But can you see that we're actually making lower lows and actually lower highs here? For now, if we connect that beginning of the wave 1 to the upside with a low of the wave 2, we get a price channel. I can mark that as a channel, as well, by adding it to the top of the wave 1. So draw a parallel channel basically, and a breakout to the of the channel to the upside would confirm impulsive price action, or at least staying in the channel for a little while. But a break below the channel would already be a very first indication. We're just about there, and you can see how relevant the channel is because we reacted to the lower boundary line. But a break below that would prepare us for already a drop down lower and probably an invalidation of the 1-2 setup. You see, we counted that already as a wave 1 diagonal, then an A wave, an overshooting B wave, and a C wave. Already quite an adventurous count. And then this would need to be a 1-2 setup, and it would need to rally. Problem here is that this looks very much like a 3-wave structure, and it's already come down a lot. So very choppy. I don't know what's going on with the market. It looks very corrective. So actually a little bit like a bear flag, even though the move down wasn't that strong. So yeah, corrective to the upside, corrective to the downside. Maybe it's some kind of a triangle even, but then I'd be a bit unsure what kind of pattern we are talking about here. I mean, it could be a B-wave triangle, so just to give you an example, but that's also a bit of an adventurous count, that off this wave 1 high to the upside, we came down in an A wave. Just think, A wave of a larger ABC structure, B, C wave down eventually, but that this B wave consists of a triangle, A, B, C, D, E. And this would be the E wave of the triangle, and then this is always where the B wave finishes, and then you would expect after the triangle a breakdown. But this is speculative. There's no point focusing on a triangle that early, because we only basically have one leg up, one leg down. But these are the possibilities I'm watching. Really key level is the 34.5 cent level. On the micro level, I gave you support, gave you that channel, and only if we hold this, it keeps the focus on higher. Until then, we are watching, but today the market starts a little bit in the red, and so far it's failed to deliver to the upside. So we need to be increasingly mindful of another, drop below the weekend support. Okay, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.